Yeah, I think that this basically meets market consensus. No one expected the RBI to change the rates at this policy meeting. The important thing to look out for is really the change in stance, and the RBI clearly stating that it remains focused on withdrawal of accommodation. Which means that I don't think that we're going to see any change in rates now until December or so, because I think that the first step towards easing rates will be a change in the policy stance, and that they have maintained this time.
So tell us a little bit more. When do you expect them to move then?
I think the first rate cut will probably happen in December, and followed by another one in February next year. I've been saying that the rate cut cycle will be quite shallow because inflationary pressures persist. There has been some recent discussion in India about whether food inflation should really be something that is included in the RBI target. So the RBI's flexible inflation target ranges from 2 to 6%, but it has been repeatedly saying that it wants to get CPI down to the midpoint of that target, which is 4%. All the monetary policy is not able to target food prices, and that is what is really causing the inflationary pressures in the economy right now. The problem is that food has a large weighting in the consumer basket, and it leads to inflationary expectations going up, and those expectations getting entrenched, and that becomes a bit of a concern. The government has been saying, some people in the government have been saying that because monetary policy can't target food prices, it should not be, that's not what the monetary policy should be looking at. But unfortunately, that's the way that the CPI basket is constituted in India, and you can't ignore what's happening to food prices either, and the spillover effect that has on broader inflation.
The commentary about food inflation is that the pressures remain stubborn, that food component of inflation remains stubborn, and they want inflation to progressively align with their target. Inflation receding grudgingly across regions. They also go on to say that fixed investment activity remains buoyant and private corporate activity is gaining steam. In terms of the Indian economy, they are expected to be the fastest growing in the world. Do you agree with that statement, and what are your projections?
There has been some concern about private investment, and I think that the budget announcement, what even the finance minister said in the budget, that the private sector should take the baton now and start investing, that remains a bit of a concern, and which is where this whole debate comes on what is monetary policy really targeting, and core inflation has actually been below 4%. So why are we so worried about food prices? And that rates should come down because we need investment to pick up, consumption to pick up in the economy. The problem is that when you still have growth rates of around 7%, and you have inflation, which consumers are so sensitive to, it takes me back to a statement that someone had made in Parliament, a politician had made in Parliament years ago, that the common man feels the inflation pinch. He doesn't realize if the economy is growing at 8-9% or whatever you want. So I think that that's where a lot of the concern comes in, that inflation needs to be durable and sustainable at around 4%, because India's consumers cannot tolerate more than that.
We're just seeing some growth targets